Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we had started discussion over the Banking Regulation Act, right? Banking Regulation Act 1949. About it we were discussing, right? And we have discussed many provisions related with this thing. And basically, in the previous lecture, we had started our discussion over the audit and inspection provisions enumerated under the BRA Act. Okay? And I had provided you a difference between audit and the inspection. All right? So if we make a quick revision of it, so basically we could say audit is like assesses the process to form out clear picture. Okay? Whereas inspection means evaluating the ongoing process to ensure complies with the plan. Okay, that is the basic definition we had discussed. Second point was that it's having a broad coverage, because whenever the audit occurs we have to assess the entire process. That's why it's having a broad coverage. But during the inspection, basically we are generally looking for some specific purpose, and when the word specific enters, it means that it's having the narrow coverage. Okay, thereafter the third point is that because it's having a broad coverage, that's why it's a less frequent. Okay, and because the inspection having a narrow coverage, it means we have to assess only some specific programs and the processes. That's why it's having the broad not broad, high frequency. Then audit. Okay, that's what we had discussed. All right, so now I hope that you have revised the previous lecture properly before you have come for this lecture. That's only you will be able to connect the points together, what I'm telling you right now and what I had told you in the previous lecture. Okay, so about regular audit provision, I have told you banks are required to conduct the regular audits typically on an annual basis, because it's have to cover entire processes and we could not organize the audit on monthly basis, weekly basis, quarterly basis, half-yearly basis. That's why generally it's happen on the annual basis. Okay, to assess the accuracy and reliability of their financial statement and transactions. External auditors, often chartered accountants, are engaged to carry out these audits, provide an independent and expert review of the bank's financial record. So basically, I had also provided you about the idea of external auditor, okay, and also about the internal auditors. Right? About them, I had told you. So basically, the external auditors are appointed by the banks from outside, and they are independent of banks management. because they are not connected with the bank. They are not on the payroll of the bank. They do not invest anything in the bank. That's why they are independent of bank's management. Okay. Whereas internal auditors are employed by the banks to audit banks' files time to time for informing the top management about the situation. Okay. So internal auditors are basically generally the employees of the banks who are employed by the top management for evaluating and assessing the files during the audit process internally and to inform the top management about the situation, like what is going inside. Okay. All right. Thereafter, we have the statutory auditors. I had told you what about the statutory auditors. Okay. And basically, we had discussed their qualifications, like their experience. Okay. Like their, you can say, their professional qualification. Okay. Like their independency. Okay. And like their quality. That's what the, you can say, the qualifications we had discussed. So basically, if we talk about the experience, then they must have the experience of 5 years in auditing the files of the financial institutions or the banks. Okay. If we talk about the professional qualification, then they must be of the chartered accountant. Okay. If we talk about the independency, then must not connect with the bank management in whichever way. All right. If we talk about the quality, then must have a clear past records. Okay. That's are the qualifications we had discussed in the previous lecture. Okay. I hope that you revised them properly. Okay. The appointment of statutory auditors is a crucial aspect of the banking regulation. Auditors are typically chosen from firms or individuals approved by the Reserve Bank of India. The choice of auditors must ensure independence and an objective evaluation of the bank's financial health. So basically, we had discussed about the qualification, about the general definition of the statutory auditors, but now we are going to discuss about their selection process. Okay. What is the selection process and how they are appointed? Okay. The first term which we had discussed right now is that only could be appointed by the firms or by individuals approved by the Reserve Bank of India. Okay, remember this. All right, only could be appointed by the firms or individuals approved by the Reserve Bank of India. For example, let's suppose this is the bank XYZ. Okay, and they are required to appoint the statutory auditors. Then they got two statutory auditors, Mr. A, Mr. B. Okay. In such a case, suppose he is approved by the RBI and he is not approved by the RBI. All right. So in such a cases, XYZ has to go with Mr. A. Alright, they could not appoint B because the B is not approved, but A is approved. Okay, now you will ask me, if we know the XYZ or any bank must be aware about it that they could only appoint the firm or an individual who is approved by the Reserve Bank of India, right? That's what I have told you. That's what we have seen. All right. So why the XYZ would ever consider B to be appointed? What is the point behind this? So I will tell you after discussing the selection process so that you will be able to grasp the fact properly. Okay. So let's start. The first step is selection of audit firms is the first step. Okay. So basically, our bank generally forms a selection panel. Okay. Or you can say banks selection panel for auditing generally selects the firms or individuals from the list of RBI approvals. Okay, so generally banks form a selection committee or the selection panel which goes through the approval list from the RBI and then they finalize the you can say the selection firms. Okay, just let me give you an example. Suppose this is the bank XYZ. Okay, and these are all the individuals and the firms A, B, C, D, E, F, G, H, I, J. Okay, these all are the you can say approved firms and the individual list. Okay, so the XYZ will make a selection panel. This selection panel will go through this entire list. Okay, and then they will finalize the firms which could be appointed. Okay, suppose they had selected A, B, G and H. Okay, which firms have been selected by them? A, B, G and H. Okay, these are the firms selected by the you can say selection panel. There comes the next step. Next step is issuance of request for proposals. In short, known as RFP. Now, RFP is just not only limited with the banks, but also with other organizations as well. Okay, RFP is basically the request for proposals. It means what the other person is offering. Let me give you an example. Okay, suppose this is you. Okay, and you want to buy a car. And there are some car manufacturings like Ford, like Mahindra, okay, like Maruti Suzuki, okay, like Fiat, all right, like Mitsubishi. So you want to buy a car, all right, and you had a budget for rupees 20 lakhs. All right, so whenever you visit the showrooms, then you will always get a brochure, right? The brochure is basically the RFP. The difference is that you haven't requested for it. Okay, it's basically the information regarding the car, what they are offering. Okay, like what car Ford is offering, what are the features and benefits associated with it. Same with the Mahindra, Maruti Suzuki, Fiat and Mitsubishi. all right, like what they are offering. Okay, but when it's come to the firms and you can say a large objects like a fighter jet, like a ship, so in such a cases, the buyer, like the banks, the governments, and anyone, has to raise a request or proposals. Okay, it means that you could not visit the showrooms directly. For example, suppose if the government is planning to buy a Rafale jet. Okay, so do you think that Rafale jet having some showroom? No. So how the government or the Indian Air Force will be able to grasp the fact like what the Rafale is offering? That's why they will issue a request to the Dassault Aviations, which is a manufacturer of Rafale, and this is a French company. All right, and then the brochure will be sent to the government of India and Indian Air Force. Then the government of India and the Indian Air Force will evaluate and find out whether the Rafale jet is beneficial for us or not. Okay, so I hope that you have got a little bit idea about the RFP. It's a request for proposal. Same things happen with the banks. Okay, like after selection of the firms by the selection panel, the banks send the RFP request to the selected firms regarding clarification of such informations like what will be the fees they will charge for auditing. Okay, what is their experience in the auditing field? All right, what is their past record? Okay, what will their auditing method and etc. So this kind of informations are generally asked in the RFP. Okay, like what is the fees the external firm will be charged, what is the current experience. If the experience will be less than 5 years, then what will happen? The bank would not be able to appoint them. Why? Experience of 5 years must be required. Thereafter, the past record and the auditing method, like what method they are going to appoint it. Okay, in our case, the selected firms were A, B, and GH. Okay, so this RFP will go to A, B, and GH firms. Okay, to give their clarification on these matters, so that the bank will be able to grasp the fact that which one is to be appointed, whether to appoint A, B, G, or H. All right. Thereafter, the third steps comes, which calls evaluation of RFP. Okay. Once the proposal request received from various firms or individuals, the top management, or you can say basically the board of directors evaluate the proposed things to finalize the particular firm or individual. Okay, so when they will receive the clarification of ABGH on these matters, then they will evaluate or examine them. All right, and suppose after the examination, the top management finds that A is very much suitable for the external auditing, or you can say for the statutory auditing. Okay, so the A will be finalized, and then comes our fourth step, which is known as the appointment of the auditor. This is the last step in the process. Okay, so basically the board of directors will appoint the firm A by providing or issuing proper appointment letter mentioning each and every terms of the agreement. Okay, this is the final step when the final appointment letter will be issued to the firm A, because the firm A has been successfully passed all the steps. Okay, but required one step also. RBI prior approval in necessary to appoint firm A. Okay, even after finalizing the firm A, okay, to be appointed as a statutory auditor, the bank has to take the prior permission of the RBI to issue the appointment letter to the A. All right, remember these points. If we talk about the roles and responsibilities of the statutory auditors, thereafter, the first role is conducting an independent audit and inspection. Okay, it is a first rule because it is the basic qualification required by them, quality check or the independency. Okay, second is reporting the auditing findings, like whatever they had found during the auditing process, they have to mention them in their submitting reports. Third is attending the annual general meetings or AGM to answer shareholders. And the fourth is communicate the audit reports to Reserve Bank of India. So these are the basic roles and responsibilities. Okay, the statutory auditors have to attend the AGM, annual general meeting, where they have to answer the shareholders. Okay, the report also share with the shareholders, and the shareholders ask the question to them and they answer the questions to them. This is the process. Also, they have to communicate the audit report to the Reserve Bank of India, like what they had found here, what is the current situation. All these reports have been submitted to the Reserve Bank of India. Okay, so that's all about the statutory auditors. Okay. Now, if we move forward, we have the submission of audit reports. Banks are obligated to submit their audit reports along with audited financial statement to the Reserve Bank of India, the Comptroller and the Auditor General of India, and other relevant regulatory authorities. It means that whatever the auditing reports of the XYZ, like this is the audit reports. Okay, these reports have to be submitted with the Reserve Bank of India, with the Comptroller and Auditor General of India, with other agencies required these reports. Okay, but remember one thing, whether something okay or not, if the report is okay or if the report is not okay, whatever the report is saying, this must be supported by evidence, and this evidence is basically the audited statements. Okay, like if the XYZ said everything is fine, okay, in their audit report, so they have to submit all the statements, all the documents which have been audited, so that these agencies will be able to evaluate whether they are claiming right or wrong. Similarly, if the report is not okay, even in such a case, the audit statements or the records must be submitted to the agencies to find out the real picture and the truth. Okay, so remember this thing. These reports are made public to ensure transparency and accountability. After the final evaluating and ensure that whatever is written in the report is correct, and then it could be published to the people of India, so that our general people like me and you could have a clear-cut understanding about any bank. Suppose in the example we have taken the XYZ, okay, what is the current situation of XYZ, what they are doing. All these things should be done to ensure the transparency and the accountability. Okay, audit of branches and offsite ATMs, it is very, very important. Okay, not only the financial process of the bank is audited, but also their branches and the offsite ATMs also audited. It means that suppose if the bank XYZ is required to maintain the 100 crores with itself, all right, and it's having 4 branches, A, B, C and D. Four branches. Okay, and basically as per the guidelines of RBI, each branch must have 25 crores with them. Okay, so 25 crores must be at A, 25 crores must be at B, 25 crores must be at C, 25 crores must be at D. Okay, this is the Reserve Bank of India's guideline. But suppose XYZ having a traffic at A and D only, and B and C they generally do not having a customers. So that's why they transferred 50 crores to branch A and the 50 crores to branch D. Alright, so if you totaling them, then they had a 100 crores reserves. Okay, so whenever the audit will happen, the files will be matched. The required is 100 crores, they having the 100 crores. Okay, but when the branch audit will organize, it means that the audit is not only organized at XYZ's headquarters, but even on their branches. So what will happen? It will be find out that they are not maintaining the prescribed reserve. Okay, they are supposed to maintain 25 crores at each and every branch, but they are only meeting 50 crores on 2 branches, and the remaining 2 branches are empty or not up to the standard. Okay, that's why the branch audits are organized. Branch and offsite ATMs are integral part of the bank service networks. Audit and inspection extend to these locations to verify the consistency and the integrity of operations. Okay, it means that if the Reserve Bank of India, a regulatory authority, issued a guidelines to maintain this reserve, so you could not modify the reserve requirement as per your own business. All right, so remember this point. Okay, this comprehensive approach ensures that all aspects of the bank operations are examined. But we have discussed about the branch. All right, what about the offsite ATMs? Like, if we auditing the offsite ATMs, then there must be some basis on which we are auditing them. Okay, so what are these bases? So basically, these bases are, the first one is cash handling procedure. Second is security provisions to prevent theft and fraud. The third is protection of customer information. And the fourth is proper functioning of ATM machine. Okay, so these are the basic points on which the offsite ATMs are audited. First, their cash handling process, like whether they having the cash. If they having the cash, what denominations they are using? 2000 notes, 500 notes, 100 notes, 200 notes. What are the notes are being used in these machines? Second is the security provisions. The location of the outside ATM is up to the standard so that it could be prevent from the theft and the fraud. Third is protection of customer information. Suppose you go to the ATM, you insert your card, then you withdraw your cash, and then you left the ATM. So generally what happen? The ATM machine removes your information from the computer data. But suppose if it is not happening, I could easily access your information. Like, you go before me, you do your work, and then when you left, I came to the machine and I found that your every information was displaying over the display. So it means that the customer information has been leaked. So this should not be done. That's why the audit occurs. Proper functioning of the ATM machine, like the machine is functioning or not. This is also inspecting. All right. Then the inspection by the Reserve Bank of India. The RBI conducts on-site inspection to assess the bank's financial health, complies with regulatory standards, risk management practices, and adherence to prudential norms. Okay, it means that the inspection officials, of the Reserve Bank of India generally visit the bank sites, whether the branches or the headquarters, to find out what exactly going there, to ensure the compliance with the regulatory standards, whether they are following it, risk management practices, whether they are appointing it, and whether they are adherent to the prudential norms. All these things are being assessed. Okay, these inspections aim to identify potential issues and ensure the bank's prompt corrective action if needed. It means that if during the inspectional visit the officials find out the bank is not following any of the guidelines which have been issued by the Reserve Bank of India, then a proper prompt corrective action plan could be launched. could be launched. Okay, it means that the Reserve Bank of India will ask the bank to perform certain functions in order to restore the balance. All right. Prudential norm and the compliance. Audit and inspection assesses whether the bank complies with prudential norms such as capital adequacy, asset classification, and provisioning and income recognition. Okay, it means that during the audit, what basically we check the capital adequacy. It means that whether they are maintaining the required capital reserve or not. Like I had given an example, if it is mandated to maintain 25 crores at every branch and the bank has only maintained it for 2 branches and the remaining 2 branches left without any capital reserve, in such a cases, it will be a violation of the guideline. Okay, and the corrective measure could be taken. All right, ensuring compliance with these norms is crucial for maintaining financial stability. Okay, internal auditors, about it we had already discussed. Banks are required to establish and maintain internal audit departments staffed by internal auditors. These professionals conduct ongoing internal audits. So basically, in banks, audit done for 2 bases. First is internal audit and second is external audit. Okay, the first audit is basically conducted by the internal auditors who are the employees of the banks, generally appointed for such kind of audit process, and external audit is basically done by the statutory auditors. Okay, and reports of both the audits must be matched. If there is any mismatch during these reports, then it could attract a serious consequences from the regulatory authority, which means Reserve Bank of India. Suppose in the internal audit report, it was given that the banks having 100 crores reserve with them. It means that their financial stability is good, but when the statutory audit occurred, then it's found that the bank only having 80 crores of reserve. Then it means that there is a mismatch in the reports, and thereafter the Reserve Bank of India will take the action, and that's I have told you a serious consequences could be attracted. Okay, internal audits help identify and rectify internal control weaknesses and ensure regulatory compliance. Okay, basically it is done to inform the top management what is the current situation, and then the correct steps could be taken. Prompt corrective action. If audit or inspections reveal significant concerns, the RBI can initiate prompt corrective actions, may involve implementing measures such as limiting lending, restricting branch expansion, or require changes in management. Okay, which means if the Reserve Bank of India finds out that the audit and the inspection report says the bank is not okay, it means that the something is wrong with the banks, then the Reserve Bank of India could restrict them lending the loans, could restrict them expansion their branches, and even change their management. Okay, which means that they change the board of members and the management directors and others. All right. Prompt corrective action aims to mitigate risks and protect the financial system. It means that the risk of problem arriving or about to arrive in the banks would be mitigated or removed. Okay. Thereafter, the supervisory review and the governance. Beside financial audits, the Reserve Bank of India assesses a bank governance structure, including the effectiveness of the board of directors and management. Risk management practices and internal controls are scrutinized to ensure the bank is effectively managing its operations. All right. Thereafter, disclosure and the transparency, as we had discussed, audit and inspection findings along with the bank's financial reports must be disclosed to the public and stakeholders to let them know what is the current picture with the bank. All right. This includes publishing annual reports and making financial statements available on the bank's website. RBI issues the periodic circulars and guidelines to bank to ensure compliance with these provisions. Okay. All right. So students, if we move forward, then we can say the comprehensive audit and inspection provisions under the BR Act 1949 are crucial for maintaining the financial system's integrity and stability while holding banks accountable for their financial practices and risk management. That's what we have discussed so far. So basically in this lecture, finally we have finished the audit and inspection provisions. In the next lecture, we will start with another important provision. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.